Hey everyone, it's Tom here from the WB Trading team, and I wanted to make today's video about a real world example, and I thought, how can I make this as straightforward as possible? And the idea came to me to look at how can we make £1,000 a month as traders? Using this as a very arbitrary value here, but looking through the aspects of how much would you potentially need as a starting account size, so how much capital, and what kind of returns would you be looking for? How can you achieve that? And sort of tying it in a little bit to how much trading do you need to do to achieve that? Now, there is no one answer to this. I'm going to give you a few scenarios to run through, some scenarios based on kind of how our strategies work. There are going to be plenty of other ways to achieve this, but I wanted to give you some sort of real world figures here to have a look through to see how easy or how difficult it would be to achieve £1,000 a month. So let's get started. Just very quickly before we dive in, if you're still struggling with your trading, or you'd like to know more about how mechanical edges are traded, I've put together a free video course for you that will map out and explain everything in detail, along with walking you through exactly how the mechanical rules actually work. If you'd like to watch that after this video, I'll pop a link in the description. You can click through and you can watch that straight away. I want to start this by just looking through a very, very simple example of what would happen if you made 10% per month. What kind of returns do you get on different account sizes? So, this might seem like really simple maths, but just to look through it visually, if we're looking at, a £2,000 account, then, okay, we're a bit off that 1,000 a month target. But obviously, as you step up that account size, the returns become a lot larger for that 10% value, as you'd obviously expect. We're assuming here no compounding just to keep things very simple. So what this would tell me immediately is that if we're looking for that 10% per month return, we're going to be needing a reasonable amount of capital in there. And that would lead a lot of traders down the funded route. Now, if you've watched some of our previous videos on prop firms, starting out with much larger account sizes than most traders would begin with on their own accounts, that's one process then that we can look at and focus in the long term to get towards, say, £1,000 a month. But for now, this is the kind of numbers that we would potentially need in our account if we're looking to make 10% per month, which is it's a high but not an unusually high return per month. Let's break this down a slightly different way and look at it in terms of R. So if you're unfamiliar with R, basically that's our risk and reward ratio. It can measure the size of our wins against the size of our losses. We've done some previous videos on this as well, which I'd recommend checking out if you're unfamiliar with how R works. But let's see what kind of return on R we need with each account size that we just looked at to achieve £1,000 a month. So here we're looking at quite a massive 71R if you had £1,000 in your account. We're compounding this over the trades, by the way, which is why this doesn't equal 100R. You might be thinking, Tom, that's quite an easy calculation. But as you can see, as we step through, the R is obviously decreasing. And now a 71R month is pretty ridiculous. And that's certainly not going to be something you're going to be able to achieve consistently. And again, we're getting towards those slightly higher account sizes, the £10,000 account again, where, that's going to be a more realistic, consistent total. I've seen people get 20 plus R in a month, absolutely, but not month on month on month. That's quite a tall order. So again, what we're looking at here is moving towards those reasonably large account sizes if we're going to consistently make £1,000 a month. We shouldn't be expecting to make that consistently if we're only starting out with, say, £1,000. This is where growing your account is important, moving up towards that larger account size, and then potentially starting to remove profits from your trading. So what I want to do now is have a look at how that actually relates to a specific approach in your strategies. I've just taken a couple of our strategies and I want to look at trading just the London session for now. So I'm talking here about just trading one session in the day. So not like a full day's worth of trading. This is going to be between just before 7 a.m. really when we start our analysis on these two strategies to usually you've completed the trades or you've at least entered the trades before 9 a.m. So what we're looking for here is the standard markets that we would look to trade a few of these markets on what we call our price reversion and session momentum strategies to give you an idea. These are both traded at the same time on the London session as well. So in March, if I just look back through the results, we got a net 18R across the two strategies. So pretty good performance, certainly. I've seen better months, I've seen worse months. Obviously, if we look back at the previous comparison we had a look at on the section just before this, that's a reasonable return, definitely. And if we're looking through, what we would need to achieve £1,000 using these two strategies in March, if you had an account of just over 5,000, you'd have hit that £1,000 a month target. As just an example there. Obviously, this is assuming we only trade the London session, so you might be thinking at this time, well, look, Tom, there's a lot more trading in the day that we could potentially do. Can we look to boost this up? And we'll come on to that in a second, certainly. I think that one thing traders need to be focused on is, the amount of trading time. And, we've done a video before on covering how much time do you need to spend trading per day. But let's have a look then at if you were able to trade for the full day, not just a small section of it. So let's have a look at an alternate scenario here where we're trading for a full day. So what I'll do is we'll say we still start out with trading our price reversion and session momentum strategies in the London session, but we could also trade one of our other strategies more longer term and the higher time frame bias bar strategy. And we're going to be doing this on the 4-hour charts. So the strategy is built around both the 4-hour and the daily charts. Obviously 4-hour trading throughout the day. Daily, we would only do this once a day in the evening. But if we have the full day to trade, we would take advantage probably of the 4-hour time frame. So if we look through this, obviously we're still getting that 18-hour result for the price reversion and session momentum combination. On the higher time frame bias bar, across a standard range of markets that quite a lot of our traders would use in March, we were up just over 12 hours. So I rounded up to 12.5 for simplicity there. So we're looking at about 30R across those two sections, across those three strategies there. Now this is trading the full day though, so obviously there's a lot more time commitment involved in here than if we just traded a session open in London, for example. But in terms of getting that £1,000 a month target as an example, we need a lower account now. Only a £3,000 account would get you there. You might be thinking at this point, to be honest, Tom, those account sizes are a little bit higher than what I would really want to be starting with. So what's the route there? Do I just slowly build up my account? And for a lot of traders, that's the best thing to do, to be honest. It practices good risk management skills as well if you're committed to long-term building up that account size. But another route we can look at is going down for a funded account. So let's have a look at that now and see how those results compare. So we've looked at the account balances we'd need if we were starting our own account, etc., to get towards that value of £1,000 a month. But how achievable is this on a prop firm? Well, not every prop firm I'm going to cover here, but most prop firms will start off with a minimum £10,000 account. You can apply for much higher values as well. But in terms of like the lowest entry point, it's usually £10,000. So obviously with that, if we go back to our numbers and have a look at, what we would need to achieve, etc., we're going to need to be hitting about 10 hour a month to get you to that £1,000 a month. And that's usually what the kind of entrance exam is for prop firms. It's usually a 10% or 10-hour gain. So, it kind of ties in quite nicely there. Obviously, we need to think about some other things on prop firms. The profit split is the main one. So you're not going to be able to get 100% of your profits. That's how prop firms work. They split the profits with you. Usually, a good prop firm would be looking at about 80 to 85% profit split for you. That might increase in your favour if you perform really well, if the prop firm sees you as a viable option, for a long-term trading partner there. But if we look at that kind of 80 to 85% profit split, you would need to achieve 13R in the month on a £10,000 account to get your £1,000 a month that you could withdraw. So we always need to factor that in when we're looking at prop firms. Obviously, if you're starting out with a much larger account size, quite a few of our largest traders that have prop firm accounts in the sort of high 6, low 7 figure range, they're trading with a lot less than 1% risk per trade because they simply don't need to up their risk. The monetary amount they're making on each trade is sufficient even at 0.1, 0.25% of a trade. So that's important to think about as well. But one key point on the prop firm side is, you might get access to a larger account, but you're going to have to split some of that profit. So always take that in mind when you're looking to apply to one of these. It's a great system, certainly, for a lot of traders in terms of accessing, decent amounts of capital that it would take you a long time maybe to save up or to trade up to. But, there's things to consider there. And so there we are. There's just a few examples of the scenarios we'd need to get ourselves to a standard figure of £1,000 a month. Now, I'm not saying any trader should go out with that mindset each month to make X amount. I think that's a bad way to approach trading, chasing profits. We should just be looking to trade as effectively as possible, and the profits will come as a result of that. But as an example, as like a real world example, which I do get asked a bit, what do I need to do to achieve this much? Hopefully that's made it a little bit clearer. For a lot of our traders, obviously, if you're looking to make immediate profits and withdraw it, I think that the prop firm route is a really solid basis for that, because you're going to get access to large amounts of capital. It's not your money to trade, so the risk is reduced for you, and emotionally that helps a lot of traders. But even if you're trading with your own large account, it's a good idea to understand, okay, what could I potentially withdraw each month? What would I need to keep in to build that account up? If you have any questions, by the way, based on what we've gone through here, any questions on our strategies, any questions on prop firms, etc., you can book a call with one of our team in the links below, and they'll talk you through how we trade in a little bit more detail, how some of our traders use prop firms, etc. Other than that, obviously we'll be here every week with new videos, so please come along for those. Any questions or any videos you'd like to see, drop those in the comments below. And look forward to catching you and seeing you on our next video.